Bottom line is this, folks. We're positive territory on the Dow. It's narrow trading. Take a look at the sectors. The retailers, again, XRT, another historic high. That's the retail ETF. That's the one on the top there. Energy, all right. Metals and mining, emerging markets. You notice as the dollar's been weaker in the last few days, this trade that we've been talking about, short emerging markets, short some of the stock markets overseas, has been unwinding a little bit. Banks haven't been doing much today, although they've had a good few days. The guys who are talking about all these amazing prints from Target, I just want to point out the same store sales numbers, because 6.5%, that was the best that we've seen in a long, long time for those guys. Walmart also up 4.6%. Those were amazing numbers. The best comps in 10 years for Walmart and 13 years for Target overall. Let's talk about where the markets are going right now, because there you go, 6.5, 4.6, and 6% for TJX. 8% for Home Depot. These are amazing numbers. We haven't seen mid-single numbers like this in a long, long time. So the bottom line is you can't do any better than this. They're refurbishing the stores. There's a turn in the apparel. We got a strong consumer. We got tax cuts. It really is amazing. Hope you saw the interview with the Target CEO this morning. It was a wonderful interview. Let's talk about the impact all this Washington news is going to have on the stock market, because that's what people want to talk about right now, Cohen and Manafort. Here's what's important. It's been very lopsided in the way trades have been for the last couple of months, because the China trade is impacted on the strong dollar. We've seen long U.S. equities. We've seen long the dollar. We've seen short emerging markets. We've seen short commodities and short treasuries. Now, the treasury short hasn't worked very well, but the market is positioned in a very lopsided kind of way. The question is, can all these political developments impact that? It's not entirely clear to me that it will. Look at the stock market and how that's positioned recently. The absurd overperformance of the S&P compared to the rest of the world. Europe, Japan, emerging markets, China down 24%. We've seen this unwind a little bit as the dollar has weakened in the last few days, not dramatically so. The numbers get crazy when you look at some of the tech names, like the internet stocks in China versus the internet stocks in the United States. It's a little bit of a joke. People draw charts comparing them. Up 27% for the United States in the internet markets, down 12% for the China internet ETF. Overall. So it's been very, very difficult to actually pick stocks and stay on one side for a particularly long period of time. Look at that. U.S. internet versus China internet. We've never seen outperformances like that. Where is it going to matter? Tony Dwyer's been talking about this for the last couple of days. He was on our air yesterday. I think he has the right attitude about it. He said politics may cause the markets to gyrate, but Fed policy, availability of credit, economic growth, and EPS cause the market to trend over time. And I think that's the important thing. Keep an eye on what's really mattering to the market right now. So you see we have stable inflation, we have a neutral Fed, we have no credit stress, we have ramping investment, and we have, in particularly, spectacularly strong EPS, far and above the rest of the world, even if you subtract the effect of the tax cuts. I think that's what matters. If there's anything that's going to impact that from the politics, yes, I think it'll be a negative. For the moment, though, the market does not particularly see that. Right now, the Dow down 14 points.